Stocks versus crypto versus real estate, which builds wealth faster? Everyone dreams of finding that perfect investment, the one that grows fast, feels safe, and builds lasting wealth. Some people swear by the stock market, others chase the thrill of crypto, and many trust the steady climb of real estate. But which truly builds wealth faster? The truth is, each has its strengths and weaknesses, and the fastest route depends on your goals, patience, and risk tolerance. Let's explore how each one works, what sets them apart, and what really matters when building lasting financial success. But before we begin, make sure to hit that like button and subscribe so you never miss out on any of our upcoming videos. Stocks, the long-term wealth builder. The stock market has been one of the most powerful wealth generators in history. When you buy stocks, you're not just purchasing pieces of paper. You're buying ownership in companies that produce goods, offer services, and shape the global economy. Over the long term, the stock market has averaged returns between 7% and 10% per year after inflation, which means your investment can double roughly every decade. This growth happens through a combination of capital appreciation and reinvested dividends, both of which compound over time. Stocks are relatively easy to buy and sell, which makes them one of the most accessible investment options. You can start small, automate your contributions, and grow your portfolio gradually through consistent investing. The biggest advantage is liquidity. You can sell your shares whenever you want without waiting months, unlike property. However, with that convenience comes volatility. Stock prices can swing dramatically in response to news, politics, or investor sentiment. In the short term, the market can test your patience. There will be corrections and crashes, but history shows that investors who stay the course usually come out ahead. Legendary investors like Warren Buffett often remind us that the key to wealth in stocks isn't timing the market but time in the market. The longer you stay invested, the more compounding works in your favor. Stocks may not build wealth overnight, but for those who embrace consistency and patience, they remain one of the most reliable tools for long-term financial growth. If stocks are the tortoise, crypto is the hare, fast, unpredictable, and capable of astonishing jumps. Cryptocurrencies like Bitcoin and Ethereum have created overnight millionaires and just as quickly wiped out fortunes. Cryptocurrency can multiply your investment in months or erase it in days. The appeal lies in its decentralized nature, freedom from traditional banking systems, and the promise of revolutionary technology. Some investors view crypto as digital gold, while others see it as a speculative bubble. In its early years, crypto delivered some of the most dramatic returns in financial history. Bitcoin, for example, rose from just a few cents to tens of thousands of dollars within a decade. Stories of early adopters turning small investments into massive wealth fueled global excitement. But the same volatility that creates opportunity also brings danger. Crypto prices are heavily influenced by investor emotion, social media hype, and global regulation changes. A single tweet can send markets soaring or crashing overnight. For investors, this means crypto can indeed build wealth faster, but only for those willing to stomach extreme risk. It's not for everyone. Unlike stocks, cryptocurrencies often lack intrinsic value. Their worth is determined by belief and demand rather than earnings or cash flow. That makes it both exciting and uncertain. However, blockchain technology, the foundation behind crypto, continues to expand into areas like decentralized finance, smart contracts, and digital ownership, suggesting that the industry still has long-term potential. The smartest approach to crypto is balance. Treat it as a small portion of your portfolio, money you can afford to lose. Diversifying across established coins rather than chasing every new token helps reduce risk. While crypto can generate wealth quickly, it's not always sustainable. The biggest winners are often those who invest early, hold through chaos, and understand the technology behind it, not just the price. Real estate, the tangible path to steady wealth. Real estate has long been considered the foundation of wealth, a physical asset that provides security, stability, and steady growth. Unlike stocks or crypto, property is something you can see, touch, and use. It offers multiple income streams, appreciation as property values rise, and cash flow from rent. Historically, Real estate appreciates around 3% to 5% per year, but with leverage, investors can amplify returns significantly. Leverage is one of real estate's greatest advantages. By using borrowed money to buy property, you can control a large asset with a relatively small down payment. For instance, with 20% down, a 10% increase in property value actually gives you a 50% return on your investment. Over time, as your mortgage decreases and the property's value grows, your equity compounds, creating long-term wealth. Real estate also comes with tax benefits. Investors can deduct mortgage interest, property taxes, and depreciation, reducing taxable income. On top of that, rent often rises with inflation, making property a natural hedge against the rising cost of living. However, real estate requires more management and upfront capital than other assets. Maintenance, tenants, and market cycles all play a role. And unlike stocks, it's not easy to liquidate quickly. Selling a property can take months. Still, real estate's slow and steady nature is what makes it so powerful. It may not make you rich fast, but it builds wealth quietly and consistently. Many millionaires attribute a significant portion of their success to real estate because it offers both income and appreciation. When managed wisely, it becomes a wealth-building engine that lasts for generations. Which one builds wealth faster? Speed isn't the same as sustainability. Crypto may move the fastest, but stocks and real estate tend to build wealth that lasts. The right choice depends on how much risk you can handle and how long you're willing to wait. Cryptocurrency can multiply your investment in months or erase it in days. Stocks grow steadily and reward patience with compounding gains over time. Real estate appreciates more slowly but adds stability through income and tangible value. Each path has its rhythm. Crypto thrives on volatility, stocks on growth, and real estate on consistency. When comparing returns, crypto wins in short bursts, stocks dominate the long term, and real estate balances both. However, the fastest growing investment isn't necessarily the best if it keeps you up at night worrying about losses. Wealth isn't just about money. It's about peace of mind and sustainability. The fastest way to get rich can also be the fastest way to lose it all. Combining the three, the smart investor's formula. The wealthiest investors combine assets for balance. Stocks provide growth, real estate offers stability and income, and crypto adds high growth potential, creating a portfolio that manages risk while maximizing returns. A typical mix might be 60% stocks, 30% real estate, and 10% crypto. Real estate income can offset stock market dips, while crypto boosts growth. Younger investors can take more risk with stocks and crypto, while those near retirement often focus on real estate and dividend stocks. The goal is steady, safe growth through diversification, not chasing quick gains. The psychology of wealth building. Beyond numbers, the real challenge lies in mindset. Most people lose money not because they choose the wrong investment, but because they can't stay consistent. Emotional decisions, buying high, selling low, or panicking during downturns, destroy more wealth than bad investments ever could. The stock market rewards patience, crypto rewards courage, and real estate rewards discipline. Success in any of them comes from understanding your emotions and having a plan. If you jump into crypto hoping to get rich overnight, you're likely to fall for hype and regret it. If you invest in stocks but pull out during every dip, you'll miss compounding opportunities. And if you buy property without budgeting for repairs or vacancies, you might end up cash-strapped. Wealth isn't built through luck. It's built through behavior. Those who stay calm, consistent, and committed through ups and downs eventually win. The bottom line, what actually builds wealth faster? If faster means instant gains, crypto leads, but for steady, reliable growth, stocks and real estate take the front seat. Crypto can spike quickly, stocks grow steadily over time, and real estate offers stability and tangible ownership. True wealth comes from time, consistency, and diversification, not chasing quick wins. The fastest path to lasting wealth is balance. Understand how each investment works, align them with your goals, and create a strategy that handles volatility and uncertainty. Crypto can accelerate growth, stocks sustain it, and real estate anchors it. The key isn't choosing one over the others. It's making them work together. Wealth comes from strategy, patience, and playing the long game, one smart investment at a time. Thank you guys for watching. If you want more videos like these, make sure to hit that like button and subscribe so you never miss out on any of our upcoming videos. See you next time.